Well, it's time now for business, and let's start as ever by taking a look at the markets. Firstly, how things closed up in the US on Thursday. All the indices are ending down at the close of play on Wall Street, as you can see there. The Dow Jones and the S&P 500 ending down around 1%. The Nasdaq down 0.65%, as you can see there. Now, as for Asia, a rather similar picture with the only exception of the Kospi in Seoul, the Hang Seng down 0.5%, the Shanghai Composite trading a little lower than that, the Nikkei in Tokyo down almost 0.9%. Well, for a bit of insight into what we're seeing on the markets, we can cross now to London to speak with Jamil Ahmad, Director of Investment Strategy at Naga. Thanks for being with us today. Now, earlier in the week, world markets were getting very excited about the prospect of a new COVID-19 vaccine. That does seem to be changing slightly.
That's completely right, Hexa. We've had another week full of emotions in financial markets, from the record highs on the vaccine development to a bit more of a reality check as we come towards the end of the week. So essentially what's happened is nobody was expecting this vaccine development. It's been taken as such news that was underpriced and news that wasn't expected, but yeah, it's the news that we've all been hoping for. So this led to world markets going like this, essentially. They surged. But at the same point, even though that vaccine might be coming over the next couple of weeks, and perhaps it'll be available by early next year, it doesn't change the day-to-day problems we face right now with the pandemic. For example, the United States has seen 150,000 cases overnight, and it's actually in the past 9 days, it's met 7 different historic milestones in terms of infection outbreaks and worst figures that they've seen. So it goes to show that although markets are starting to price in a return to normal, hopefully Q1 next year time approximately, the challenges to the real economy today and what's happening with this pandemic today are not changing. So there's a bit of a contrast in what's happening here.
And Jamil, Joe Biden, of course, is gearing up to take office in the US in January, but he is inheriting a very difficult situation as far as the economy goes.
That's completely right. Look, the job situation in the United States economy is going to be pretty significant, and even worldwide jobs. And actually, overnight, the Federal Reserve Chairman, Chair Jerome Powell, who's the head of the US Central Bank, essentially made some very interesting comments that although we might see light at the end of the tunnel, he alluded that although life might be able to get back to a form of normality next year, early next year, that this pandemic has brought so much changes and challenges to different kind of industries and different kinds of jobs that there's going to be a massive group of people, employers, employees that are going to continue to need support. And this made me think of the Disney results that we saw overnight as well, because we saw the first annual loss in Disney for 40 years. We also had a company that let go about 28,000 people over the late summer because of having to close its theme parks and other entertainment venues. But the same point is share price overnight surged because it saw such a shift towards a Disney Plus streaming platform. We've had over 70 million subscribers over the past 1 year, that this shift towards technology has caused all sorts of different industry trends, and that there will be businesses that will need a lot more time to adapt to this after the pandemic.
And Jamil, oil prices are reaching their highest level in months. What exactly is going on there?
So essentially what we've seen, Hexie, is oil prices have hit their strongest level since early September, based mostly on the vaccine development, and it managed to piggyback on that good news because oil is still a risk asset. If we have stronger stock markets, we have stronger oil prices in tandem. That's the general relationship. So investors are thinking that demand must improve in 2021. There's no way it can be as low as 2020. But as we've just been saying, with the pandemic challenges today and these very grim milestones that many are facing with infection outbreaks, the difference between a couple of days and weeks in this market can feel like a year if we go back on what we've been speaking about the past couple of weeks. But to look that far ahead towards what might happen next year, I think that the biggest challenge now for oil prices to continue above $40. Then maybe we can talk about 45. But we're not dismissing that this virus is still peaking in many, many countries, and there's still economic challenges. So that's why I don't think everybody can hang their hats on stronger oil prices being here to stay quite yet.
Jamil in London, thank you very much.